On to your markets now. Asian markets ended the day on a positive note. This as markets await the Fed decision on interest rates later on this evening. However, Hong Kong markets were closed due to a holiday in that country. The Nikkei share average rose by 0.5%, while the Shanghai Composite Index also rose by the same margin. Over in the United States, stocks were largely unchanged at Tuesday's close. This as market players just took a wait-and-see approach in terms of the Fed's next monetary policy move. Both the S&P 500 and the Dow Jones closed more or less flat after hitting record highs, while the Nasdaq bucked the trend a little bit, ending the session in firmer territory. The Dow Jones Industrial Average closed down 0.04%. The S&P 500 ended up 0.03%, while the tech-heavy Nasdaq rose by 0.2%. The JSE is trading lower today, with the all-share index down 0.4% at 82,659 index points. The rand is trading at 17.56 against the US dollar, 23.23 vis-a-vis the British pound, and 19.56 against the euro. Looking at commodities, gold is trading at $2,572 and platinum at $977 per ounce, while the price of Brent crude oil is trading at $72.36 a barrel. Warwick Lucas is from Vunani Securities and he joins us now. Very good afternoon, Warwick. So the JSE registered its biggest gain this month, yesterday. Is this a sign of more positive news to come on the local bourse?
Well, I think a lot of it's a relief rally. You know, there was a lot of foaming and angst about the Bella bill, and at the end we saw the politicians decide to act like grown-ups. I mean, we're fortunate to, in our first canoe, have a president who's generally a consensus seeker. I mean, he's passed most of the bill and he set most of the vexing clauses to one side. And in any case, most opponents have got alternative remedies, court and so on. But I mean, nevertheless, because the Education Ministry is a DA ministry, they must also play to the gallery of their supporters. So welcome to life under coalition government. I mean, it's certainly going to be a lot noisier, but hopefully more inclusive in the final analysis.
Yeah, interesting times indeed. There's a lot happening. And of course, the big focus is on the US Fed Reserve's decision on monetary policy later on today. Markets have been, arguing about whether it's going to be a 25 or 50 basis point cut. What's your expectation, and how do you then expect this to filter through into the Reserve Bank's decision on interest rates for South Africa?
Right, so in the context, I mean, last week we saw US inflation headed the right way with a 0.4% fall to 2.5% year on year, although so-called core was sticky on the month, and that's core is a data set that excludes fuel and food because of their volatility. Let's just ignore the fact that they happen to be rather important. Anyway, the Fed indicated at Jackson Hole that they would pivot to a loosening bias, and they've telegraphed that loosening already, and the EU's made it pretty easy for them with their own 25 basis point cut on Thursday. And now I guess the debate we're hearing is, well, 0.25% or 0.5% cut. And perhaps there was a time that we might have seen that half-point cut up until that discussion about sticky core came through. I mean, there's also a big unknown as well. There's quite a lot of consumer firepower hidden in mortgages that could come into play with increased property values as well. So there's a lot of discussion. The Fed's behind the curve, they say, but it's election time. And, deeper cuts could be interpreted either as political alignment or as a signal that there's a deeper underlying problem. So Jerome Powell has to tread very, very carefully in making his moves. So I think what we're probably going to see is about a 25 basis point cut with a bit of a narrative about watching how the data looks as being the guide to the way to go. What does it do for SAB? It gives them the opportunity to also follow through with 25 basis points. And fingers crossed, I think that's what they should hopefully do tomorrow.
Indeed. And then let's take a look at a couple of companies. Of course, earlier on today, we did have a stock come out, the Grindrod. They came out with an announcement indicating that they're going to be purchasing the balance of a terminal that they own partly 65%, but they're now going to get the rest of the 35% to own it 100% in Mauritius. How important is this decision for Grindrod? Of course, Grindrod is a logistics company that holds companies that transport product via land, sea and air. So just give us your thoughts on Grindrod and what you think about it as a company.
Okay, so Grindrod's acquired control, 100% control of TCM Mauritius, the crown jewel of which is probably port operations in Mozambique. And I think what's very important here is what's effectively happening is they're taking some localized operations off of a massive global giant called Vitol, which is a Danish operator. So it effectively means that Grindrod are basically establishing themselves as a very strong home-based niche competitor. It can be potentially profitable, and it also means that they perhaps are taking over from these global giants that tend to really give these sort of outlying areas a little less TLC than perhaps their own home bases. So it looks like a virtuous circle there and a nice opportunity for Grindrod.
And then Southern Sun, they came out with their trading update for the 5 months ended August. They're, of course, the hospitality group. Their numbers were not so great. They said that their occupancy rate stood at 57.1%. That looks quite low. And their average room rate rose by 1.7%. They did note that their numbers were hampered by the fact that last year they had massive demand for their services because we had the BRICS conference. And so that was a very high base with heads of states and all sorts of people, renting rooms, etc., etc. Just give us your thoughts about Southern Sun. It seems as though the hospitality sector has improved vastly since those terrible COVID days.
Well, yes, absolutely. I mean, COVID was a complete wipeout for hospitality. I mean, in many respects, it completely reset it. I mean, think, for example, of something like City Lodge, which used to look like an absolutely stable property trust and then suffered terrible pain under COVID. It's generally, accommodation is quite economically sensitive. It's a fairly good indicator of what's going on in the economy, obviously like for like. As you point out, I mean, the BRICS conference created quite a big prior base. And then, of course, having the elections, it typically tends to put a little bit of a damper on accommodation providers as well, because normal business tends to get put to one side until elections are out of the way. So it did show, I think, in aggregate, a weakish local economy, but nevertheless a business that's managing its way through, and I think credible under the circumstances.
Warwick, thank you so much for your time. As always, Warwick Lucas, he's a portfolio manager at Vunani Securities.